Let's bring in tax attorney and president of Walser Wealth Management, Rebecca Walser, and senior fellow at Unleash Prosperity and chief economist at the Heritage Foundation, EJ Anthony. Thank you so much for joining us this morning. Rebecca, I'm going to start with you. So this new report, bit of good news, bit of bad news. The good is that it could spur U.S. economic growth. The bad, on the other hand, however, is that the drop in imported goods could be a sign of slower consumer spending. Your thoughts?
Yeah, I mean, I do think that we are having overall a global slowdown, with the exception of AI and the technology frontier. And obviously, we had a four-session trading going into yesterday and to the negative. And obviously, with the NVIDIA results, everyone expected, we did, and the market expected double beat. We got that, and we got really great forward guidance. So you're just going to see positive momentum going into today. And that's really exciting. We needed some good news. And so but, you know, overall, the consumer is struggling. And what's really burrowing up this market is the AI and the CapEx spending.
Yes, that's AI, the boom that we have seen with that. But let's turn to the housing market right now. So Zillow now saying more than half of all U.S. homes lost their value over this past year. So it's fueled by a slowdown in demand. While the report could be scary for people who maybe already own a home, EJ, could this decline be something that ends up as a positive for those first-time buyers?
Well, Alex, I think that's exactly right, especially given the fact that the median age of first-time home buyers is now 40 years old. I mean, that's staggering. And because of that, people have been delaying major life milestones as a result. In other words, people are waiting to get married. They're waiting to try to have kids until prohibitively old ages, essentially. And I know we don't think of 40 as being old, and in many ways it's not. But if you're thinking about it in terms of trying to start a family, it certainly is. And so I think it's a very welcome development to actually see many of these home prices come down in a lot of the very, very hot markets, because it's going to help younger folks get into a home sooner. And in many cases, it's not as if these markets really had genuine appreciations in value. It unfortunately was the result of bad public policy that drove home prices through the roof. So again, very good to see them coming back down.
Yeah. Rebecca, you want to jump in on this as well?
I was just going to say the low rates, when you have the Fed funds rate at 25 bips for 13 years, you really get expansionary prices in housing because the monthly payment can be a lot lower. When you go to a 5, 6, 7% rate, your housing value budget goes down a lot because you can't afford the monthly payment. So we have seen obviously a retraction just because interest rates been being elevated since 2020 to 2023.
Yeah. Again, that was under the Biden administration. But let's talk a little shopping. Target could certainly use a Christmas miracle. The company is now saying its third quarter struggle will likely, unfortunately, extend through the holiday season. So to try and offset companies' declining stock, Target now planning to drop another $1 billion to remodel their stores, build new ones, invest in its future. Rebecca, I'm going to go back to you on this one. Is this money well spent?
This $1 billion is in addition to the $4 billion that they've already committed to do exactly this, Alex. Wow. Their stock is down 45% year over year. And the bottom line is that the comparable sales went down 2.7% in Q3, which is greater than it was in Q2, which was down 1.9%. So we're seeing a larger slowdown in sales. Okay. I still believe that this goes back to what they pulled with the Pride, and people still just do not feel the same about Target. And the new CEO that comes in fully in February needs to really address that head on.
Absolutely. Again, that's February. Their new one is coming in. So finally, a staple of the 80s and 90s is hoping to make a bit of a comeback. Sizzler, the casual steakhouse focused on affordability, and that famous all-you-can-eat salad bar is hoping to win people over once again. It may be working. So while only 74 restaurants remain, the company is now saying a rebrand and a remodel is proving to be pretty successful, with sales way up. No word yet if more locations are planned, but EJ, with beef prices skyrocketing, is this some place that you should go?
Well, Alex, affordability really is the word of the day. So many Americans have been hurting for years now. It's not as if this is a problem that just started this year. It's been going on for several years, where prices have risen so much faster than incomes. People are looking for deals anywhere they can. They're looking to save a buck anywhere they can, and that includes for food. In many parts of the country, food prices went up about 30% in 4 years. I mean, that's absolutely obscene. Who saw their income go up that quickly? And so as a result, one of the things we're seeing when we look at consumer behavior has certainly been this shift away from what you would consider more average or sometimes even luxury purchases and back to more economical choices. And that would include things like all-you-can-eat buffets.
Yeah, I mean, affordability has been the buzzword for a long time now. And, we even looked at some fast food restaurants. My goodness, a burger was going up to like $16 in like the state of California. Just utterly insane. So this is a good sign. Rebecca, EJ, thank you for joining us this morning. Such a pleasure.
Thank you.